Come to Remora TC to trade like a shark and not get eaten by one. Let's school together to protect and grow our money. Hi everybody, welcome back to my channel. It is Tuesday, December 16th, a week before Christmas. I'm sure you all are super busy doing all your Christmas shopping. Perhaps not last minute, but nonetheless, the time is ticking. With that, let's look at the tickers because there's only about 2 weeks left of real trading for the rest of the year. And overall, the volume should be fairly low. That's kind of what we should expect at this time of year. The big fish, the sharks, the whales, they're taking time off with their families. They're enjoying their Christmas presents because they've made a boatload of money this year. So I hope you've done fairly well, especially with the assistance of this channel and my material helping you to protect your winnings. And that way you can start next year on a more positive note. So let's kick things off with the triple Qs. You can see the price action in the past week, the rejection here at the edge of the gap fill. And you can see that this line that I drew here along the 610, 611 point is indeed, it's been resistance for the past couple of days. But overall, my projection for triple Qs remains to the downside. I'm not changing the projection, with the next real area of support down here along the support line. I'm going to slide this over to the right, and you can see it also coincides with where the 200-day would likely hit. So let's slide this over because it's playing out. It's fine. Overall, more downside, more selling. That's really what it is. More selling by the sharks. And then when the middle size institutions show up, then you'll see the volume here spike up. Okay, that's what we expect to see, is a spike in selling volume. Switch to GDX, the gold miners play. I did the prediction a couple weeks ago saying that the shark signal will be put up here due to what I expect to be bearish divergence. So the double top indication, in fact, came over here the past 3 days. And you can see that this high here, and then you have a higher high up here, okay? Price is going up. You can see very, very clearly that the RSI and the momentum down here is to the downside. It's opposing. It is diverging. And with that, we have now the real shark signal. I'll just get rid of these quotes because it is really, it's there. The sharks are telling one another, get out, take your profit, boys, and enjoy your Christmas. So I just expect a break underneath this trend line. Let's just slide it over. Actually, let me fix it real quick. And pull it just like that. Okay, about like that. So I expect a breakdown underneath this trend line, and then it's a resumption of selling. So the bearish indication has shown up. It's no longer a predicted shark sell signal. In fact, it is a full signal to sell by the sharks. All right, switching to Bitcoin. Bitcoin flag signal. You can see here, I made this annotation, this prediction of 58K somewhere down here in the next, I don't know, quarter, next few months, next 6 months. The time frame is uncertain, okay? But the prediction is there, and I'm leaving it there. The flag signal, the flag played out here, and one could say, well, maybe, your flag is drawn at a slightly wrong angle. There could be a few of you that say, well, maybe your annotation should be more like this. It doesn't matter. The main point is the flag, the breakdown of the flag has already begun. Okay, you could say it wasn't this one because price came back. It used the, what's this line here? It used the 86,000 as support, which it did. Came back, retested the purple trend line, long-term trend line here, and now broke down underneath again. You can see that I put this as resistance. Okay, it's like that. It was actually like this. Okay, it's resistance. But when you zoom in, it kind of, moves up a little bit. But the point is I drew it. Price bounced off of that, right? Hit that. Got rejected, came back over the past week, got rejected a whole bunch more times, and now the further move downward. I don't expect this 86,000 to hold much longer, okay? So if you're in this long, I told you a couple weeks ago when I switched over to the Bitcoin USD index that the sell signal took place. Okay, I made the annotation up here. With all this divergence. So if you're in it long, take your profit because the next move down is going to be quite significant. Okay. So from where we are here to the 58, let's just make this, so like here, down to 58, 58's down here. It's another 30% drop. Okay. So 30% from there and from the highs, all-time highs up here, that's about a 50% move, okay? So get out while you can. If you're in it long, protect your winnings, and we'll revisit it when the bullish signal, the whales jump back in. They give each other the signal, okay? Switching to Microsoft. Same double top pattern. First one here, second one here. The momentum change down here. I didn't annotate it because it's not a textbook one. It was more of a my gut feel. So that's why I didn't annotate it down here. But if you go back a few weeks, all the way back to end of October, watch those videos. That's what I said, okay? Anyway, you've got the bear flag here. And you can also see people can argue, and that's just the way the internet is. Everybody has an opinion, and this is my opinion. One could say, hey, your flag is drawn really poorly. Fine, I could redraw it. I mean, it doesn't matter. What matters is the momentum signal. This is the hourly that I'm showing. Let's switch back to the daily real quick. There's the daily. Okay, the main point is the sell signal came. The first leg down came down here. You can see the price attempted to reclaim this 517, got rejected on the bottom side of the gap fill. Continue the selling. The dip buyers came back in. They're all happy. Good for them. But there is no momentum change. There is no bullish momentum change. And the selling continues. Right now, price is sitting on the 200-day. It's not going to stay there for all that long. And the resumption of selling will come. So my annotation here isn't changed. Actually, I'm going to slide it over real quick. I like to use the arrow because it looks nicer, just from a visual standpoint. So, okay, I'll go like that. All right, so there you go. Let's switch over to Northrop Grumman. You can see this huge rebound, okay? Last week, I drew these blue lines to highlight that a different flag was showing. So this flag here. Now the chart looks really messy. But what I do want to show is how price today, so let's get rid of this blue one real quick, just so that it's cleaned up a little bit. I'm not changing my prediction, it's the same. I just want this chart to look a little bit cleaner so I can explain to you where price is going. So today's last couple of days, see this green candle right here? This is yesterday's price. So this is the 15th. I'm going to go to the hourly and let's zoom in and kind of see if price is moving. So the bottom edge of this triangle, something like this, I'm going to drag it. It's like that, right? So you can see price on the hourly. And here, this is the daily. So the daily, the bottom edge of this flag goes there. Maybe some people might say, hey, maybe you should have drawn your flag like that. But my main point is this is resistance. This is a resistance zone. So there you go, resistance zone. Further low prices. This is no longer in play just because prices moved to the right. But the breakdown and the overall direction is unchanged. Now you could say, hey, well, does it go back like this? No, I'm going to leave it right here. I'll leave it where it was, which is right there, because the overall direction is down to this 518. Maybe it'll take a while, come down, bounce off the 200-day, whatnot. But the 518 is still the overall location. So if you're in long Northrop Grumman, consider taking profits. You're lucky that you got this nice little rebound here. This little move here was, 5-6%. So it brought you back 5-6%. Be happy. Take your profit because this is all resistance up here. Okay, resistance in many ways. It's kind of like there's many ways to cook eggs. Eggs many ways: scrambled, poached, sunny side up. You don't want to be cracked. Okay, so take your profits and then just wait. I'll let you know when the momentum has changed to the positive for us to consider going long. Last two tickers. American Express, exactly where I want it to be, because I said last week that American Express was setting up to come back to hit resistance up here in the purple, and indeed it has over the past couple of days. You can see that. And this, my friends, is where the sharks really want to be selling, and those who want to play the short side would take a short. I was busy tonight, so I didn't jump in the trade myself. The past couple of days, I didn't jump in because I didn't really see the heavy volume. But with the third red candle, I could see it possibly peeking its head up to this trend line. But really, I'm going to give it a couple more days, see if it'll keep trending here before I consider taking a short. Overall, American Express to the downside. I'll slide this to the right. And support down here somewhere in this 280, 277 zone down here. So this is the financial sector. This is the whole thing. Well, one of the main points I wanted to make tonight, repeating what I said last week, is that the predominant way in which the market makers will teach you is they'll say rotation. They'll use that word. It's time rotate out of technology, go into financials, or rotate out of metals and go into healthcare. The whole idea about rotation is a fallacy from a momentum standpoint. Don't just do it arbitrarily based on what pundits and those who are sitting, in their nice suits talking about where to put your money. They're sitting on TV telling you where to put their money. What you need to be looking at is momentum, because they'll tell you to get out of tech because it's a rotation, right? Big players are moving out of tech and they're going to go into financials. But financials is not where you want to be. They're trying to get liquidity so that financials could be shorted and sold. So right now, I would not buy American Express or any financial ticker like Bank of America. Here's another one. Bank of America, same setup, momentum tremendously to the downside, right? Negative momentum, divergent with price. And you can see here, rejection of here, just like the American Express one, and price is breaking down, okay? So don't be fooled. And my arrows, okay, there you go. Support down here at 38. We'll revisit it down there. But for now, watch out. If you're in long financials, I recommend that with these two tickers, you also revisit the tickers that you're in. Maybe you're in Wells Fargo, or you're in BlackRock, right? Any of these financial tickers, JP Morgan, Morgan Stanley, be really careful because they're wanting you to rotate into them so that they can have liquidity. That means they have somebody on the other side of the trade to which they can leave the small guys like you and I with the smelly bag of shit. Okay, so don't blame me if you're holding the bag. All right, so that's it for today. I'm going to get this video out as quickly as I can, a little bit later than usual, but I want to have you prepared heading into the Christmas week. And so good luck. Please give me a thumbs up. Share my material with your friends and family. Leave me a comment. And as always, good luck with your trades, and I'll see you next time.